Hello and welcome to our Talk Tech webinar series. This is week 1 of a 5-week virtual mini-series on a startup equity opportunities. This mini-series will help you learn what investors are funding, how to protect your IP, different equity funding options, and how to build a strong founding team. Talk Tech webinar series is brought to you by the SBDC at UCI Beal Applied Innovation. The SBDC is funded in part by the U.S. Small Business Administration and the State of California Governor's Office of Business and Economic Development and other sources. The SBDC is here to help you start, grow, and succeed your business by providing no-cost expert consulting and training sessions such as this fantastic webinar series. A little housekeeping before we begin. Everyone is muted during the webinar. All webinars will be recorded and sent to all attendees after the webinar has concluded. Once the webinar concludes, a brief survey should appear. We would love your feedback and would also like to know what other topics you are interested in learning about. Tomorrow, the recorded webinar will be sent to all participants. A PDF copy of the slides will also be included in the Dropbox link. There will be Q&A at the end of the presentation, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. Once the presentation concludes, I will ask questions presented in the Q&A box or chat feature. I may not get to everyone's questions, but we will do our best. If we don't get to your questions, please email khaledh@uci.edu. This week, we have the pleasure of hearing from Tsou. Lisa is the founder of the Winning Pitch and advisory board member / judge of the Women's Founders Network. The Winning Pitch is a private consulting practice which advises startup companies on growth strategy and funding so they can reach the next level. Today, Lisa will be talking with you all on what an angel investor is and why they are important. Additionally, learn how to find and approach the right angel, what you need to make a great pitch, and how to build a relationship with your investor. Thanks for speaking today, Lisa. I'm going to turn it over to you.
Thank you so much, and I'm thrilled to be here with the Talk Tech webinars. And yes, this is Guide to Raising from Angels. And what we're covering today, as was discussed, is what is an angel investor? Why do we talk about angel investors so much? Are they these mythic creatures? So one thing today is that I'm going to aim to demystify what exactly is an angel investor. We are going to talk about why they're so important and why we do talk about them in the startup ecosystem. Maybe even more importantly, we're going to be talking about finding the right angel investor for you, because not every angel investor is a good investor for every company, and it's important to find the right match. So we'll be talking about that aspect as well. And yes, we will be talking about a few keys to approaching angels and making a good introduction and a good impression on them. So hopefully that they will invest in your company. Who this is for. This webinar is for entrepreneurs who are growing their business and looking to raise capital and are trying to find out what really is the best funding strategy for them and how an angel investor may fit into that strategy. This webinar is also for entrepreneurs who may already be in the funding process but may have hit some roadblocks and are trying to figure out why they can't seem to get over the hump. It's also for people who may have an idea for a business and are thinking of taking the plunge and starting that business and want to get an idea of what is the lay of the land if they try to grow it in the future. And if you're a Shark Tank fan who may want to understand a little bit more about what that show is trying to model, this may be fun for you as well. Now, who am I? Why are you listening to me? As was explained, I am a startup funding strategist in Los Angeles. I come from a long background on Wall Street funding startups, and so now I run a private consultancy, The Winning Pitch, where I work with entrepreneurs who are trying to figure out how to grow their businesses and fund their businesses. In nutsy boltsy terms, I do spend a lot of time on people's business plans, their pitch decks, their strategy for targeting investors, and figuring out how that is all going to pull together. I also spend a lot of my time as a board member and a judge at Women Founders Network, which is an accelerator in Los Angeles, which works with women-led startups in getting them to growth capital. I run the coaching program there, and I'm proud to say that since 2013, our alumni have raised over $68 million. I'm also a mentor at accelerators like Techstars, the Precelerator, and if I look familiar, you may have seen me featured in publications like the Huffington Post, Business Rockstars, Startup Nation, and Women 2.0, talking about funding and startup and the startup world. But enough about me. Let's get to it. So what is an angel anyway? Who are they? Why are they referred to as angels? What are we trying to do? So if you'll indulge my inner economics nerd, I like understanding where things come from. So I'm going to take you back for a minute, maybe 30 seconds, to talk about the Great Depression. As most of you should know from US history, this was a cataclysmic economic disaster in American history. Worldwide trade fell by more than 50%. Worldwide GDP fell by 15%. US unemployment alone hit 25%. And just for perspective and for comparison's sake, during the Great Recession in 2009, unemployment hit 10%. So we're talking about more than double of what happened then. Now, unsurprisingly, in the wake of this total economic disaster, Congress moved to put into place legislation so that a disaster of that magnitude would never happen again. And so the Securities Act of 1933 was born, and it's still the framework for US modern securities law today. Now, don't worry, we're not going to go into a dig deep of the Securities Act of 33. Nobody wants to do that. But the part that matters to you is this. Generally, under US securities law, companies who have not registered their securities, generally that means they haven't had an initial public offering or an IPO, they cannot offer their securities for sale. That means that if your company is not listed, it's not registered, you just can't go to the man or the woman on the street and say, hey, would you like to buy shares of my company? No, you can't do that. Of course, by now you may be saying, wait a second, if that's true, how do startups get funded? How does that even work? And so here's the part that's really important for the purposes of this webinar. In the Securities Act, there is an exception for accredited investors. And so accredited investors are allowed to buy shares of securities in companies that are not registered. So what's an accredited investor? An accredited investor is an individual, well, for individuals, it's someone who has an income over 200,000 or 300,000 for companies filing jointly, or a net worth of $1 million. Accredited investors, like an individual who falls into this exception, are allowed to buy unregistered securities. And this is what we call an angel investor. Now, one thing to keep in mind, this is the only thing that qualifies somebody as an angel investor. An angel investor is not certified in any way. They doesn't mean they have any particular education. Doesn't mean they have any particular professional experience. All it means is that they fall into this category of having this amount of money in order to invest in unregistered securities. So in fact, an angel investor could be, often is, somebody who has a lot of startup experience, who has done well and is able to invest in a startup. But just as much, it could be your brother-in-law, the dentist. So I want you to keep that in mind. Now, angels are key to the startup ecosystem. They have been key to the startup ecosystem from time immemorial in startup terms. It's been true since Fred Terman wrote Hewlett and Packard, Check in the Garage. Silicon Valley is littered with stories of important angel investors. A famous one recently would be Andy Bechtolstein, who wrote Sergey Brin and Larry Page a check on a porch in Palo Alto. So, and the reason for that is because angel investors are generally the bridge between friends and family and institutional investment, which usually means venture capital. So usually that means that they are the people who are putting in capital between, say, the money that your friends and family were able to put in. Traditionally, that's been considered between $50,000 and up to, say, $1 million, which is usually when venture capital starts coming in. They are often also key mentors and advisors in the ecosystem. As I said, partly because they often are founders and senior executives from startups who have exited. So they're a key element in the rise of Silicon Valley. Now, again, let's dig a little bit deeper into this. Why is that? And it's because angels are not VCs. Angels are not venture capitalists. If you take nothing else out of this webinar, please take this piece with you. Angels are not VCs. You can forget everything I said about the Great Depression. Take this. And this is a key point and something that I think gets glossed over a lot in casual conversations about funding, because angels and VCs are usually spoken of in the same breath. Sometimes they're almost spoken about interchangeably, but they're not the same thing. And this is really important to understand if you're seriously considering raising money for your startup. So let's dig into this for a minute. What's a VC? Venture capitalists are professionals who professionally manage investment funds. That means that they are responsible to their own investors, their limited partners who put the investment money into those funds. That also means they have a responsibility to those investors to make returns and to justify the fees that they're charging those investors. And that the result of that is that generally they're looking for specific metrics and risk profiles in the companies that they're looking to invest in. And they often specialize in an industry that they know well. So for example, you'll have VCs that specialize in software. And you'll have VCs certainly that specialize in biotech, because that's such a specialized area. There are VCs who do CPG. There are VCs that do digital media, etc. The bottom line is that they're investing other people's money. And because of that, they have very specific financial and risk considerations that they're taking into consideration as they put money into companies. On the other hand, angels, again, are individuals who are investing their own money. That means that they can invest for any reason or no reason at all, quite frankly. That also means is that they can be much more flexible in their investment. As I said, they can invest for any reason. So they can invest just because if they like an idea or they like a founder. And as a result, they're often the earliest outside investors in a startup because they can take that extra risk in something that's early stage that they happen to like. So the bottom line is angels are investing their own money and they can do what they want. So, I'll give you a list of some of the reasons that I've seen angels invest. They invest for personal interest reasons. They really like an area. They really like a founder and the company. They like an idea. It's just something that interests them, and so they'll put money into it. They'll write the check. So in particular, one area that angels are very key, for example, because of personal interest, is biotech. Biotech is very challenging for a lot of venture capitalists because the timeline can be very long. The risk profile can be very high. Those are two things that venture capitalists are not crazy about, since they're looking for often a 10x multiple in 5 years. That can be a very challenging thing for most biotechs. So you'll often see angel investors coming in to shore up that extra period in the timeline because they're interested in it. Oftentimes they'll have a family member who's been affected by a certain issue, and so they have that personal interest in finding that cure for Parkinson's or something that will help with cancer treatment. So personal interest is a big one. You'll also see angel investors who, because of personal interest, are interested in investing in, for example, underrepresented entrepreneurs, people who are, I work with Women Founders Network. We have angels who have done well, who want to invest in other women entrepreneurs, or certain ethnic groups who have not been represented. So personal interest can be a big one for a lot of angels. Angels may also invest because they're interested in mentoring an entrepreneur or giving back to the community. As I said, a lot of angels, particularly in Silicon Valley, are people who have been successful entrepreneurs themselves or senior executives in startups who have had an exit, made a lot of money, and are interested in mentoring and giving back, which can include a check. Again, with people who have been in the ecosystem in the past and are interested in staying in the ecosystem, sometimes angels will invest because they wish to stay current. They want to stay on top of current technologies, trends, things that entrepreneurs are doing, and so they'll become an angel investor. There is also the phenomenon of what sometimes you'll hear referred to as Ferrari investors who invest because they think startups are a cool thing to invest in, and they like telling their friends that they invested in a startup. Kind of like having the Ferrari in the garage that they like to talk about. So sometimes you'll see angel investors who invest because it's cool. And you'll also see angels who invest because they really think that they can make money at it. So they'll invest for portfolio or financial considerations. They think that they can find the next Google and will invest as an angel for that reason. I'll often say that these are often people who, again, come from a startup or finance background. They are investing their own money. So sometimes I will say you'll see VCs who invest their own money as an angel as opposed to fund money. So you'll see that as well. One thing to keep in mind with people who are investing for portfolio or financial considerations, they are often investing in something that they expect will receive further investment down the line, and that they can get a large multiple, like a 10x multiple on their money within some period of time, often 5 years. So yes, they are unicorn hunting, kind of like VCs, but at an earlier stage. That also means that they can also come in with a VC home run mentality because they need to have a home run with a large multiple, considering the high startup failure rate. Anyway, what you should know certainly is that these aren't mutually exclusive. Any one investor is probably a pie chart of a number of these factors, weighing with different weights in them. So some people, it's a lot personal interest, but they'd also like to make a lot of money. Some people, it's a lot of portfolio financial considerations, but they also think it's cool and they also want to mentor. People are people. A lot of different considerations will come into play, but through any one person. But yes, because they're investing their own money, they can make their own decision with it. Now, I'm sure by now, some of you are like, okay, enough about what angels are. How do I find one? How do I get them to invest in my company? This is what I'm asked most often about. If angel investors are so important to financing and getting a startup off the ground, how am I supposed to find one and get them to invest in my company? Well, of course, I have a slide for that. And the answer is, again, remember, an angel investor could be anyone who fits that income and asset profile. So an angel could be your dentist. It probably is your dentist. But I think what this question is really pointing at is, okay, how do I find an active angel who really is likely to invest in startups, who does it reasonably regularly? And here are some common places that you could find an angel. A lot of it's through networking. There are angel groups that you can find on the internet. I'm sure if you were to go to the Beal Center at UCI, they could point you in the direction of Tech Coast Angels and Golden Seeds and Pasadena Angels and Harvard Business Angels and any number of angel groups that they're basically holding up a sign saying, here we are, we're angel investors, we like to invest. You can also find angels through organizations like accelerators, university groups. There are lots of networking events that angels hang out at. Certainly specific groups in a particular area, like for example, if you were in digital media, you could find some of those groups online, quite frankly, and go there, and often you'll find angels hanging out at those groups. If angels are interested in investing, they're often out and about looking for startups to talk to and find out about and potentially suss out for investment in the future. With the magic of the internet, there are also online resources. So you can find angels in LinkedIn, Crunchbase, AngelList. The information is out there. It's actually not that hard to find active angel investors. The bigger question really is, who are the right angels for my startup, quite frankly? And I say that because oftentimes I'll talk to investors and they'll say, oh, this person came up to me, I gave them a coffee meeting, and the reality is I'm totally wrong for them for some reason, and it was a waste of time. And you don't want to burn investors in that way. So I think as you go out to these groups, as you start networking, as you start getting passed along from one contact to another contact to hopefully angels who are in your area, the question is, who are the right angels for my startup that I should be talking to? And some questions to start asking and thinking about as you do some research of who angels in your area may be, I think are, do they invest in your industry, in your geographic area? As I said, I will get investors, venture capitalists, angels who will say, oh, I was talking to this person, I gave them a meeting, and they came into my office, and they pitched me a CPG idea when I invest in software, and it was a waste of everyone's time. So I would do some research and find out about them, ask about them. Do they invest in your industry? Do they invest in your geographic area? Are their checks the right size? As I said, the only thing that makes an angel is that they fit that profile. But a lot of angels invest at a specific check range and size. So you'll have angels who write $25,000 checks. You'll have angels who write $50,000 checks. You'll have angels who do $100,000 checks, certainly. Okay, not me, but there are people who write checks of that size. Are you looking to raise something that falls into their check size that makes them a good person to talk to? Or are you going to be having a conversation with them, not necessarily for them to invest, but for them to give input on someone who may be a good person to talk to for their investment? And something I think you should definitely consider and do some research about before you get into a conversation with an angel investor is, have they invested in a direct competitor? And do you want to talk to them about perhaps your technology, your trade secrets in that event? I would definitely do some research before you get in deep with any investor to make sure they have not invested in a direct competitor, because one, they're not going to be investing in you probably, but also because you don't want to be sharing any important information with them that ends up in your competitor's hands. Conversely, what can be interesting for you to do some research on can be, is there an angel investor who has invested in a company that could somehow be complementary to you? That can be a very interesting conversation and could be an investor that you very much want to target and start having conversations with. Now, so those are like basic things that you should definitely do in any research with an investor. But some other things that I think you should be thinking about as you consider investors that you want to speak to is, what else can an angel bring to the table? I mean, I talk to startups and they'll be like, oh, I just want somebody who can write me a $50,000 check. But in an ideal world, that's really not the best way to think about investors, because let's face it, you have to live with that person and hopefully they're not just bringing money. So what else can an angel bring? They can bring mentorship. As I said, a lot of these people are experienced in the startup world, and they can give you a lot of good advice about ways to go that can really make a big difference in the trajectory of your company. Also, they can make connections. I've seen in a lot of cases, I can give you a lot of examples, for example, from Women Founders Network, where we've connected women with angels who not only made the investment, but also made the connections to other advisors. In a couple of very important points, they made connections to other important team members, which made a huge difference in companies. So what other connections can an angel bring? Can they make an introduction to someone who can be a strategic partner? That is something to definitely consider along the way as you talk to investors. Experience, of course. I've been down this path. Let me tell you what awaits you if you go this way. Or I can advise you that if you go this way, you can cut out 12 months of grief. Experience can be really important. Very important point. An angel can bring along other investors, whether now or later. They can, as I said, they're often the bridge to venture capital. So who else does this angel know? What is the worth of the $50,000 check from your brother-in-law, the dentist, versus the $50,000 check from someone who's been a senior executive at Google who can make an introduction there, or Amazon, or any number of places, or someone who has been a venture capitalist in the past and can make the introduction to further financing down the road. Also, yes, remember, if you are taking along an angel, or if you're bringing on an angel investor, you have to live with this person probably for years. make sure you get along with them. Make sure it's someone you have good chemistry with. I, in the past, have done mentorship matching for programs, and I can't tell you the difference in the relationships that I've been able to foster where the chemistry just happened. They worked really well together and were able to have a relationship for years down the road versus, yes, you know, I do my best, but sometimes the chemistry doesn't happen and they're like, yeah, that just didn't work for us. So think about that. Who do you get along with? It is a relationship. In that vein, yes, approaching investors is like dating. Many of you have probably heard that before, but it's really true because it's still about human relationships at the end of the day. You have to get along with this person. And if you're working together, and sometimes that can be even deeper than some personal relationships we have. I hate to put it that way, but it's really true. Approaching an investor is like dating. It's about building that trust and communication where hopefully someone will write a check and you can have that strong, positive relationship that lasts for years. So, as I said, it's about building the trust relationship. What does that mean? It means that in best case scenario, hopefully, you're starting with a warm introduction. The reality is that investors, a lot of professionals, don't like cold emails. So what do I mean by that? Sometimes I will get a cold email in my inbox. It's from someone I don't know. Hey, I heard about you. Would you do a meeting with me? And sometimes I'll take that meeting, but it works a lot better if that person comes through a warm introduction because you already have a little bit of trust going. Someone I trust sends me an email saying, hey, I've been working with this founder. I've met this founder. They seem really great. They're working on an interesting idea. Would you do that meeting? In almost all cases, I'll take that meeting. And that's true of a lot of investors because you don't know if someone is trying to meet you because of some really great idea or because they have this really off the wall idea. Someone once wrote an email, I took the meeting, and it turned out they wanted to overturn the Philippines. That happens. So in best case scenario, start with a warm introduction. How do you get a warm introduction? Okay, I didn't go to college with so-and-so venture capitalists. I wasn't in a fraternity with this person who's an angel investor. How do I get to a warm introduction? Yes, utilize networks, whatever you have. If you have LinkedIn, organizations, events, I hate to say it, but it's true. Not everyone is starting out with the same assets of having been in a built-in network. That's unfortunately the reality that we deal with. If that's your case, then yes, I do advise that you go out and start building relationships in organizations, in events, and start meeting people, start building that trust. It will go a long way toward when you are actually raising funds. And yeah, I know it's true. This is probably, it's not an overnight exercise. When people tell me, oh, I want to raise money, sometimes even now, they're like, I want to raise by the end of this year. And I'll look and it's October 15th, 16th. And I'm like, that's going to be very hard because the reality is that solid relationships take time and building trust takes time. So whether you plan to raise this year, next year, I advise you to start building the trust relationship as soon as possible. Because if you can sow those seeds now, when you want to raise in a year, you will be in a much, much, much better position. Okay, but okay, what do I need? I want to talk. I found the investor. They invest in my area. They invest in my geographic area. I fit the specs. I don't see anything in their portfolio that's a conflict. What do I need to start approaching investors? So let's very quickly go through what you'll probably need in your toolkit. One, I highly advise that if you're going out, whether to start building partnerships or to start talking to investors, that you put together an elevator pitch. And founders will talk to me and they're like, what do I need in an elevator pitch? What does that mean? And can't I just start talking about my company? And the reality is that, yeah, you could do that. In a few cases, that'll work. But the reality is, if you are talking to an investor, someone who's active, who's maybe talking to a dozen founders a week easily, they'll be going through lots of people. It will be very, very helpful to you to have a very concise, very to the point introduction of who you are and what you're doing, something that they can remember. So what I advise is that you have a 15-second verbal calling card elevator pitch that you can use for both meetings and emails that very quickly, very concisely talks about what you're doing, who you do it for, and what they get out of it. And this is going to be helpful because, one, an investor is going to be like, okay, I get it. I'm interested in talking to that person. When they email me, I will be willing to take that meeting. Or I get that in an email someone has sent on to me. Yes, I will take that meeting. Or in other cases, you may approach an investor, you may say this, and they may say, oh, that may not be for me, but I can do an introduction for you to somebody else who I think this fits their profile. That's actually one of the most useful things that a good elevator pitch can be used for. So as you start getting ready for funding, really think about what you want to say in your 15 seconds that you may have with someone when you meet them, or that first few minutes when you're sitting down in a meeting with someone. It will really be very helpful for you. I spend an inordinate amount of my time with founders talking to them about this issue, because a lot of times I'll get feedback from investors, sometimes after full-on 20-minute pitches, where they'll come back and I'll ask them, well, how did it go? And they'll tell me, sound like it could be interesting, but I don't understand it. I don't understand what they're doing. I don't understand the basics. And so I'm not going to invest. So as you're going out, as you're prepping for talking to investors, think about what you want to say to them in that very, very precious first few minutes. And the second thing that you will definitely need as you start getting into real conversations with investors is an investor pitch deck. And yes, this is the 10 to 12 slides addressing key points that investors want to hear from you. And unfortunately, this is not a webinar about the pitch deck. We could certainly spend an entire webinar talking about the pitch deck and what you need to say and the order that you need to say it and all the boxes that you need to check for investors, and more importantly, the greater issues that they need to understand before they're going to invest. But unfortunately, this is not that webinar. So for now, I'm just going to say, yes, you need 10 to 12 slides addressing the key points. And not to go into every point, but some of the things that you really should think about as greater issues when you're putting together your pitch deck is, who are you, the founder, and what are you doing here? Why are you doing this? Investors say that they invest in the founder as much, maybe more than they invest in the idea, because quite frankly, there are usually a number of pivots along the way. So really get into the crux of that. Think about, why does the world really need this? Whose life does this make better? Who are your customers and what are you doing for them? Think about, why is this a good time to do this? I see a lot of companies that have great ideas and oftentimes may even have good technology, but they're coming along at the wrong time. I've seen, unfortunately, a lot of otherwise good companies fail because the timing was wrong. So think about, why is this a good time for whatever you're doing? One thing I can tell you every investor wants to know about, and often gets missed in a lot of pitch decks, is a really good understanding of how far have you gotten in building this company. Do you really have something up and running? Have you shown that your technology works? Do you already have customers? Are you in the middle of a beta? Be very clear about how far you have gotten, because if you've gotten down the track, that's a great sign for investors. That takes some of the risk off the table. And I think founders can get caught up in what they're doing and forget some of these nutsy boltsy. This is how far we've gone. This is how much we've built. This is how many customers we have. So something to definitely highlight. And finally, why are you the right team to make this happen? I see great ideas from people that investors may not have confidence that they can really do it. So you need to really explain why you are the right people to make something happen. Now, okay, we've covered a lot in just about 40 minutes. So this was definitely an overview. It was not an exhaustive survey of angel investordom, but I hope this was a helpful overview of angel investors, and I hope it demystified some of what they are. So please, if you still want more information, there is plenty out there. If you have questions, I'm certainly happy to chat. Please feel free to email me. Or if you'd like to talk one-on-one, you can always book a time with me at talktolisat.com. I love talking to founders and finding out about what you're doing. So please feel free to reach out. So I think we have some time for questions.
Yes. Are you ready?
I am. Hit me.
All right. So what are alternative paths to funding from the standard angel and VC model?
That is a great question, and one that I get a lot, because quite frankly, the traditional angel VC model is something that doesn't fit a lot of people. Part of the way or all of the way. I mean, sometimes I myself feel I'm ridiculous in telling people that they should be trying to raise $50,000 in friends and family, as if everyone's family has $50,000 lying around. So there are some different alternatives that may be out there. Depending on what you're doing, grants may be one way to go. Certainly I see something a lot of in the biotech space, but also in some other areas as well. I've seen it in green energy. I think one of our women founders network companies has quite a bit of grant and SBIR money. Bootstrapping may be something that can work for some people. It's something that I see a lot of entrepreneurs doing because, quite frankly, that's the money that they can count on. It's not the fastest way to growth, but it can be a very healthy way to grow because you're relying on yourself and it gives you the most control over what you're doing. Something that's come up a lot in the last few years is crowdfunding, which there are different flavors of crowdfunding at this point. There's the traditional Kickstarter, where it's kind of, in a lot of cases, almost a pre-order, but there's also equity crowdfunding that's out there now, which, if you're interested in that, I strongly advise you to talk to an attorney who is well-versed in that area, because there are lots of ins and outs of that may or may not work for companies. Those are some of the more common alternative funding strategies that I've seen.
All right. Next question is, when is the best time to engage an angel and VC investor, especially given our stage in development?
Well, as I said, it's better to start engaging an angel or a VC earlier rather than later. And by that, I mean having conversations with them. That doesn't necessarily, actually, in most cases, that doesn't mean that you're asking them to invest immediately. But it's good to start getting on their radar and to getting them to know who you are, what you're doing, start having conversations about what your progress is. What I see with a lot of investors, if you do this well, and they start getting interested, is you'll start having meetings with them, coffee, lunch, something like that. They'll ask you about what you're doing, how far you are. And then they'll be like, yeah, let's have coffee or lunch in 3 months. And what the point of that is they want to see how far you can get in that 3 months. What they want to see is that you're still making progress to your goals. If you said, okay, here we are, this is what we're doing, we're starting our beta test at, in 3 or 6 months, they'll be like, okay, so how did the beta testing going? What happened? What's your next steps? And tell me what you're doing now. Okay, beta test went well. We're starting to bring on clients. We're going to bring on a top class salesperson and maybe something else. And okay, 3 months later, hey, okay, so how are the new customers doing? How did the pipeline go? Did you hire that salesperson? Yes, no, progress. Okay, so they want to make sure that you are keeping on your progression as you think that progression is going to go, or maybe you pivot. They want to see that it keeps going. So when you start reaching a stage where they may write a check, they feel comfortable, they trust you. As I said, this is a trust relationship, that you are going to do what you say you're going to do with their money. What I hear a lot from investors is they say, we invest in lines, not dots. So they want to see that your nice line of progression is going upward, and that they can feel comfortable with it. So earlier rather than later. Okay, that was a long answer.
It was a great one, though. Would it suffice that I only have a provisional patent when approaching an angel investor?
It's going to depend. Sorry, it's a lawyer answer. It depends on what it is. It's certainly better than not having a provisional patent. It's going to depend on what the investor's looking for, how much risk they're willing to take. Do they feel comfortable that you can protect your whatever it is with a provisional patent? I think the thing is they're going to want to feel comfortable that you have what they'll often refer to as a moat, that you're not going to have a whole bunch of competitors beating down the doors of this market that are going to stomp you. The classic question is like, what's to prevent Google or Amazon from coming in? Will the provisional patent be enough to do that? And I don't know enough about your area to say, but it's something that I would certainly start having a conversation with. If you have a specific investor in mind, I would certainly start having the conversation and say, we have a provisional patent. If it's a good investor who, as I said, may have experience and could provide mentorship, they may be like, oh, that's good. Or I would suggest that this is the next step you should take.
Do founders need to intentionally need to seed fund their own company to get up and started, such as app development, before pitching to an angel investor?
So the question is, do you need to self-fund the initial app development, I guess?
Yes.
Okay. If you have the money to do it, you're almost certainly going to be asked the question, well, why aren't you investing your own money in it? Which you'll have to come up with an answer with. If you don't have enough money to do it, obviously you're going to be raising money from somebody to do it. I guess this is the question. What I would say, and sometimes I'll get this from founders who have clearly exited and made a lot of money, that certainly as they start approaching investors, the investors very logically will ask, well, if you exited with, say, an 8-figure settlement from your last company, why are you asking me for money? Which, is kind of a logical question. So you'll have to come up with an answer to that. Is that you want to bring more people in? What is it that you want to bring investors for? Or, sometimes, I was sitting around the table last night with investors as we were considering some companies, and a very prominent angel investor was sitting to my left, and she was like, okay, why does this company need us? And you have to come up with an answer to that.
Okay, next question is, what about crowdfunding that SEC approved so that the opportunity of startups are not only offered to the top 1%, rich people and unaccredited people can participate?
So is the question to comment on the crowdfunding that allows unaccredited investors, I guess?
Yes.
Yes. Yes. So this is the caveat to my long spiel on the Great Depression and the Securities Act of 1933. Is in the wake of our last economic disaster, the Jobs Act was passed, which expands crowdfunding possibilities to something beyond just Kickstarter. So now equity crowdfunding is out there. It does exist. It's possible. A lot of equity, and my overall answer to, if you're thinking about doing equity crowdfunding, is please talk to an attorney who's very well experienced in the area, to the extent that's possible in the last few years. It is possible. If we were to say, okay, equity crowdfunding, there's the traditional Kickstarter, way you could do it. There's also the equity way you can do it. Within the equity way that you can do it under the Jobs Act, which was passed in the wake of the last recession, you can do it in ways that involve accredited investors, or you can do it in ways that involve non-accredited investors. So Joe or Josephine Schmo on the street. The thing with that is that there certainly are a number of restrictions on it, because it's not like the US government could allow this to happen without waiting in there as well. So if you're going to go down the roads of equity crowdfunding, whether with non-accredited, accredited, some mix of that, there are reporting requirements that you're still going to have to do, which you may or may not want to take on. If you're doing it with non-accredited, there are limits as to how much you can raise. So as I said, I would strongly advise that you talk to an attorney who's experienced in the area. It is an avenue, but it's not something you can just jump into.
Should angels sign an NDA?
NDAs are going to be hard to come by, especially, well, pretty much ever, but especially with angels early on in the process. And this is part of why I strongly advise that you, one, go through a warm introduction, and two, do a lot of research before you really sit down with an angel investor. Because the thing is, if you're talking to an active angel, it's extremely likely that they will be talking to a dozen founders a week. And if you ask them to sign an NDA before, especially before you meet with them, the issue becomes, well, I talked to this founder and this founder and this founder, and I probably talked to 300 founders in the course of a year, just in the course of, being an angel investor and going about my life and my professional life. I don't know if I'm talking to founders who may have IP that overlaps with each other. I don't want to get into an issue of like, oh, did I mention this thing that you talked to me about to this other founder, when the reality is, like, I see all kinds of founders who bring me all kinds of stuff. I mean, me, Lisa, just being me, I think it's not unusual for me to have founders, sometimes 5 founders in a month, bring me the same idea. And if I signed an NDA, I don't want to get into this legal issue of like, oh, I said something to this person or not that person. So that's a long answer of like, NDAs are going to be really hard to come by with active angels, and probably are going to mark you as someone who's experienced and doesn't know what they're doing.
Would you suggest an investment banker or just find investors by yourself?
Um, do I suggest an investment banker? I personally would not suggest an investment banker just because I think how much do you really want that person to be between you and your investors, one, and also how big are you to have an investment banker interested in you? If you're doing well enough to attract an investment banker, you're probably doing well enough to talk to investors on your own, quite frankly.
Are accelerators really going to find you investors, or are they scams to get money for their advice?
Uh, there, there are a lot of accelerators out there, and I work with a couple of really great ones, honestly. But just as well, there are a lot of really schmo accelerators out there. Um, So it's an area that you really need to do your homework in, because I think maybe 3 or 4 years ago, I think everyone and their aunt was starting an accelerator. And no, of course, they were not all quality. I would not say that all of them were worth doing it. But there are some fantastic accelerators out there as well. I work with Techstars in LA. I was just at their demo day yesterday. And yeah, a lot of the companies, either in the course of the program or in the demo day, were getting checks. So it's very much a question of what is the quality of the accelerator that you're looking at. Are they in an area that are they in the area that you are in, as in, if you're looking at I don't know, software. Are they an accelerator that works with software a lot? Are they an accelerator that works with a lot of green energy or CPG or whatever area you're in? You need to do your research that, one, that they're reputable, they know what they're doing, and also who are their mentors and people that are working there, and are they experienced in your area, and can they help you?
Great response. I love that question. Where can I find angel groups?
I think the Beal Center at UCI probably has a list of them. One, there are a bunch of them. That's a serious answer. One, I'm pretty sure they know the major angel groups in the Orange County and Irvine area. But I would also look at AngelList. Off the top of my head, I named some of the big ones: Tech Coast Angels, Pasadena Angels, Harvard Angels, Stanford Angels, Golden Seeds. There are a lot of angel groups out there, and I would ask honestly at the Entrepreneurship Center of your local university.
All right. And then the last question is going to be, can you repeat the organizations and the clubs you named when you mentioned where to find angels?
Okay. One I mentioned is Tech Coast Angels, a very large one that operates a lot in Orange County. One that's a big one, along very reputable one here in LA is Pasadena Angels. There's Golden Seeds, which works with women founders, which is an angel group. There's Harvard Business School Angels, which is a group, obviously, of Harvard alumni that invests. Stanford Angels and Entrepreneur also is an angel group. I think those are the groups that I mentioned off the top of my head. There's also the Silicon Valley Angels. I would certainly start by looking in your local area, and as I said, probably checking with the Entrepreneurship Center of your local university. I'm sure they would have a list. I think angel groups can be extremely helpful because they are a group of angels all together. There are challenges in pitching angel groups because, again, you have a group of people all together, and the dynamic may or may not work for you, but it's certainly something to explore.
All right. Thank you, Lisa. Can you go to the next slide, please?
Oh, sure.
Perfect.
Well, thank you, Lisa, for joining us for today's webinar and everybody that joined us. If you're interested in no-cost one-on-one consulting or more information on coaching and pitching and seed funding, please fill out the form at sbdctech.com/contact. If you have any other questions, please email khaledh@uci.edu. Thank you, everyone.
Thank you.